VWAP is another indicator we'll cover in this series of short tools that are used by chartists when trading in the stock market. Even if you've been trading for a while, these simple and short refreshers can definitely still help you. So what does volume weighted average price, or VWAP, actually mean? VWAP is calculated by adding up the dollars traded for every transaction, which just means the price multiplied by the number of shares traded, and then dividing that by the total number of shares traded for the entire day. So this will give you the average price for the security throughout the day, and kind of give you an idea of what the average investor paid for that security through the day. Take a little closer look at this chart. VWAP is the average value of a stock price that's traded over the course of a set time, or whatever time length your chart is set to, mine is set to the hour here. So this is the volume weighted average price for the hour. Traders use VWAP as a benchmark to ensure that their stock purchases or the security that they purchase are in line with the volume on the market. So again, here on my chart, you can see all of the indicators that we've covered in our previous videos, which are RSI up here, MACD, we've got some moving averages to confirm trends. And then you'll also see added today VWAP, and it's represented as crosses here, these blue crosses within the price action. So the theory is that if the price of a bought trade is lower than VWAP, it's a good trade, it's a good buy. The opposite is true, that if the price is higher than VWAP, then it's not such a great buy. And traders can gauge their efficiency by comparing the price at which they traded the stock, by comparing the price at which they bought to the VWAP. So they can compare what where VWAP is now and what they bought, that their buy-in price is. Buying lower indicates a great price relative to the majority of other traders throughout the day, and buying higher indicates that you paid a little bit more, or sometimes a lot more than the majority of others throughout the trading time frame that you're looking at. A lot of pension funds, and even some mutual funds use VWAP to monitor their trades. And when these funds note that their intraday price varies widely from VWAP, they'll typically or may take action to effectively alter their cost basis to get closer to it. So let's take a look at what VWAP tells us at times and the signals that it gives. You can see here this is not a good time to add to your long position, at least based on volume weighted average price, and here's why. I took the time to explain this instrument because it's a great tool to have to be able to know where you stand in comparison to the general all the other traders. But if you trade with a tool or an indicator that you don't fully understand, you might take this incorrectly. So this price is this candle is above the volume weighted average price, so that would be bullish for this is the S&P 500, so that would be bullish for the S&P, correct? Right, but you wouldn't want to just buy in because it's over VWAP, because you have to take into consideration that if you buy in here in this candle, say you bought in at the low of this closed candle, you bought in at around 2049, when the volume weighted average price for this 30-minute period that we're looking at is 2046. So you actually bought in 3 points higher than the average investor in this time period paid for this security, which would be a bad buy on your part. On top of that, we can add in the other signals that we've used. We've gone through some momentum indicators and things like that. You can see here that this was overbought and definitely took a downturn here. We've got some moving averages starting to curl over, looking like a moving average fixing across. This was as of the close on Friday, but we've got double RSI here, and you see the cross. So that gives another big sell signal here. So this says not a good time to buy, to add to your long position. Excuse me. We had a MACD crossover, the signal line crossover here, and we've got some divergence still, so this is growing in distance. So that's signaling some downward momentum. Now, the reason this isn't a good time to add to your long position is because, besides the fact that you don't want to pay more for the security than the average investor did, is that as well, there's going to be a lot of selling up here because the average investor bought here for this 30-minute time frame, and they've got all of this price up here, and they see all these negative indicators that you see. They see these moving averages going down. There's going to be a lot of selling, and we'll go into some volume profiles and stuff in a lesson coming up shortly. We'll take another look at an example. This is a good time to add to a long position based on volume weighted average price. It looks like it's very bearish for S&P. It is very bearish based on the VWAP. It is very much lower than the volume weighted average price that everyone else paid for the security. So for SPX, this is bearish. For the investor looking to buy in, noting that the trend is up, the moving average is up. This is a perfect time to add to your long position. You can also see down here at the bottom, we start to get some convergence with our MACD, which gives us a buy signal. We also are oversold. This gives you another great indicator. So you add this indicator, these indicators, plus the fact that you can get it at such a cheap price relative to the average trader did in this time period. It's a great buy for your long position. I know this was basic, but this should give you a basic understanding of VWAP and how it applies to confirming your trades against others around you. This is a very important indicator that gives professional traders the signals that they need to make the right decisions on both sides of the market. This week, we'll continue to move through several volume-based indicators to help you learn how to improve your trading using volume on top of our momentum indicators that we've already covered in our video series this far. If you enjoyed this video and the others, and you'd like to come into a noise-free, friendly, productive environment with other traders to talk, share charts, learn, and trade together, please feel free to come to our website and join us for a 5-day free trial. You will love it. Thank you very much for your time.